Well, all eyes are on the US Federal Reserve now, which is expected to slash rates for the first time in over 4 years, as global investors wonder whether the Fed will opt for a rare, bold 50 bips cut or stick to 25 bips cut in its pursuit of a soft landing in the US economy. India is keenly watching out for all the sectors in the portfolio rejigs as well. But for now, Jonathan Schiessl is joining us. The Deputy CIO of Westminster Asset Management London is joining us. Hello, sir. Thank you so much for joining us today to weigh in on the Fed rate cut that we're expecting anytime soon now. But Jonathan, tell us, it's unusual to have so much uncertainty into a Fed decision, as the central bank typically tries to telegraph its next move to the markets. Traders had believed up until now for most of the last month that Fed would lower by a quarter point, but the idea of a supersized cut began to gain traction in just past 1 week. Does that indicate towards a recessionary or a slowdown fears in the US economy?
Good evening. Yes, I think the confusion is as much the fault of the Fed as analysts scratching their head about what's going on with the US economy. I think you're quite correct. Up until about a week ago, if market participants have been told that a 50 basis point cut was going to be delivered by the Fed, I think it's very likely that the market would have got into quite some panic, thinking that there was obviously something very bad data around the corner they hadn't seen yet. I think, though, as you rightly point out, over the last week or so, there have been signals, subtle signals coming out of the Fed to expect a larger cut. Obviously, the market, I think the Fed is very cognizant of the market pricing in quite a few cuts already by the end of this year and next year. And I think either the market's got too far ahead of itself or the Fed is a little bit behind the curve. So it's probably a bit of both, to be honest. And therefore, I think the chances of a 50 basis point cut have increased dramatically over the last week. And I think probably consensus out there is 50-50, whether it will be 25 or 50 basis points.
Right. Also, Jonathan, the ushering in of a rate cutting cycle is expected to shore up a stalling economy and further boost an already strong market. If you look at S&P 500, that's at record high, following an 18% gain this year. Now, history shows that the benchmark have averaged gains of about 16% in the 12 months following the first Fed rate cut in a cycle. Now, if Fed was to cut, rates by 50 basis points, is it likely to lead to a rally in the markets?
Yeah, that's a good question. I think it is a little bit different this time. I mean, clearly, the US markets have, up to this point, anyway, up to the very more recently, have been led by a small number of high growth technology stocks, the Magnificent Seven, as they call themselves. And I think what you've seen as the market's getting more certain that we might get, rather a pronounced rate cutting cycle, that we're seeing some change in leadership. So whilst it's unlikely we'll see the sort of dramatic increases in equity market in US markets following the usual Fed cutting cycle, probably what we will see is a broadening out of the market and the non-tech sectors doing very well, the more cyclical sectors. But the large cap tech stocks, which have led up to this point, perhaps will relinquish some of their leadership that we've seen over the last few years.
Right. Also, Jonathan, the debate will be less about the recent weakness in the labor market and the easing inflation, but it's rather, all about where things are headed further in the future. The Fed uses its commentary as a tool, has been using its commentary as a tool more than the rates, actually. What are you expecting from Fed's commentary?
Yeah, I think, as you rightly say, that's the critical, 50 basis points, 25 basis points, that's all very well and good. But I think, as you rightly say, everybody's really going to be focused on that commentary. I think, clearly most consensus expectations out there are the Fed, that the US will likely go into a soft landing. There are obviously some predicting a recession. So commentary on that, commentary on how far the rate cutting cycle is likely to go will be critical. because clearly the market is pricing in, as I said a few moments ago, the market's pricing in quite a considerable amount of cuts already. And if the Fed backpedals on that in the commentary, then the market reaction might be quite severe. So there is a lot at play with the obviously the communication following this decision.
All right, Jonathan, thank you so much for taking the time out and joining us on this discussion. On that note, we will let you go, but thank you so much for tuning in.